Here with me now is someone who's no stranger to the PDAC. It's Peter Gray. He's the managing director of Headwaters, but in another life he was also a mining head over at KPMG, correct, Peter?
That's right, yes. I've been coming to the PDAC for about 15 years now. So I come from a little further south than New York. My practice is based in New York, but I'm originally from Australia. But I've been venturing to Toronto in the coldest week of the year for about 15 years.
So you know a little something about the PDAC, and maybe you can help us understand how you feel the sentiment has shifted over the years, and what would you say it's like now in 2013?
Well, Daniela, I've seen the good, the bad, and the ugly of mining and the PDAC over the years. I'm a little confused this year. I would have expected a sentiment today, given what's happening with gold prices and valuations of companies, to be somewhat more pessimistic than I'm seeing out there on the floor. Having said that, there is some cautious optimism, but a lot of challenges ahead for the junior mining space. I think you're seeing a flight to quality among investors, and again, some nervousness around where to deploy capital.
So you're actually seeing optimism, which is rare, but where is this coming from? Is it from the juniors or the majors?
No, I think the majors are going through a period of transition. You've had change at the top. You've had massive cost overruns and capital costs of construction. That has direct and immediate ramifications for the mining industry. Junior mining is really challenged at the moment by the relative absence of capital. You've got some very good projects where companies have now either depleted their cash positions and are really managing that very tightly, or they're looking at alternative sources of capital. That's where I'm seeing the optimism, the alternative sources of capital.
Peter, I was speaking to one geologist yesterday who said he wouldn't be surprised to see at least 600 companies exit by June of this year. What do you think of a statement like that?
I don't think it's an outlandish statement. I think, frankly, if you walk the floor at PDAC, there'll be a completely different list of characters here next year. Companies that will have not survived this part of the curve. And it's a function of availability of cash. As I said, there are a lot of good projects available, projects that will eventually be in production, but they have an inability in their current form with their current capital base to actually get to production. So I'm expecting a large period of consolidation among the junior mining companies. I'm yet to be convinced that the major mining companies will play a significant role in that. So I think there'll be a lot of mergers of equals, a lot of money coming in from outside of North America, sovereign wealth money, private family office money, resource fund money, commodity traders that invest in the junior mining space. That's where the optimism I'm seeing in the market comes from. There's a lot of nervousness among junior miners about how they're going to advance their projects and move that path to production forward.
Well, Peter, do you think the industry even needs that many juniors? Do we need that many people out there looking for gold?
You know, Daniela, in my experience, junior mining is crucial to the lifeblood of mining. It used to be 20 years ago that major mining companies would explore and significantly discover the new deposits. In many commodities, we have not discovered large-scale mass production potential deposits. We don't have the ability to spend that money and convert that into future production without juniors exploring. The majors do a lot of joint ventures with junior mining companies, and that's incredibly important. But the lifeblood of the future production is junior miners.
Right.
Yeah.
So Peter, you have an extensive background in mining, obviously. What do you think needs to happen for the industry to get back on its feet?
Well, Daniela, there's been a lot of positive changes in the industry across the board, from junior mining through intermediate producers to major mining companies. And that's been a generational transformation. We need more investment. We need more stability and security of title in countries where that is a challenge and an issue. And we need an influx of capital. The positive thing and the attribute that I've been talking about, the influx of money coming from sovereign wealth, from family offices and from private equity, that's a relatively new paradigm in mining. We're seeing at Headwaters a lot more attention paid to junior mining and intermediate mining companies by funds, by resources funds, by the commodity traders, and increasingly by family offices.
Peter, how concerned are you by the lack of new discoveries being made? Will this become a serious issue, this issue of dwindling resources in the gold sector?
Do you know, we aren't bringing massive new production or new discoveries along, but it's a demand-supply equation. As we look at $1,600 gold as a baseline at the moment, and we get concerned at the fall of gold, the long-term forecast, the long-term demand-supply equilibrium for gold supports a much higher gold price. It's really a function, Daniela, of capital costs. They've got to really focus on the capital costs of construction. The mining industry has had a large issue with this in the last few years, and shareholders' patience, their patience and their confidence in management has been tested. So in terms of supply of gold, price of gold, availability of gold, future discoveries, it's less of a concern than it is taking those discoveries through to production, the actual cost of extraction.
Right. And finally, Peter, would you say long-term, are you bullish on gold?
I'm always bullish on gold. I'm bullish on precious metals overall, because the reality is, as we move forward and countries like India and China and Korea continue to expand, it's not even a store of value or an economic driver to gold, it's a cultural driver. Right. So we're not bringing on masses of new gold, we're not bringing on new deposits in the foreseeable future. So the availability of gold and the demand for gold will drive higher prices. So I'm bullish on the price. I'm less bullish on operations. Okay. We're going to be mining deeper, more marginal seams. And as an economist, as an investment banker, I'm always looking for good projects with good infrastructure and excellent management. I'm bullish those circumstances in gold.
On that note, I thank you for your time, Peter. Some good thoughts from you today. Thank you.
Thank you. My pleasure.
And thanks for watching our coverage from the PDAC here in Toronto. You can email me any comments or questions at newsfeedback@kitco.com or follow this conversation at Daniela Cambone. Thanks for watching.